The international conversation around the formation of central bank digital currencies, or CBDCs, has steadily grown louder and more prevalent over the last few years. Starting with the advent of Bitcoin, the possible need for central banks to put their country's currencies on the blockchain seems to have become more pressing, more real with each passing year. This is particularly true within the context of the last year. With the dawn of Facebook's Libra project, the news that China would be expediting the creation of its own national digital currency, and the financial crisis created by the outbreak of COVID-19, the case for CBDCs seems to be stronger than ever, particularly in the United States. However, forming a so-called digital dollar isn't simply a matter of building a blockchain. There are myriad things to consider in terms of technology, regulations, distribution, interaction with the existing financial system, and much more. Still, the only way forward may be through. With Libra, China, and the coronavirus crisis vaulting the economy into the future, the formation of a digital dollar may be inevitable. Therefore, there are some who believe that while now may not be the exact time to begin building a digital dollar system, now is certainly the time to be exploring what a digital dollar might look like and how it might operate. Among them are former CFTC Chairman Christopher Giancarlo and former Lab CFTC Director Danielle Gorfine, who championed the formation of the Digital Dollar Foundation earlier this year. The foundation has started the Digital Dollar Project, which is currently exploring how a digital dollar could be safely built. The project has partnered with multinational professional services firm Accenture to expand this exploration. Recently, finance magnates spoke with Danielle Gorfine and Accenture's Danielle K. Martell on the vision that the Digital Dollar Foundation has for the future.
Danielle and Danielle, I want to thank you once again. Let's go officially on the record. Thank you for coming on the show.
Great. Thanks so much for having us.
Yeah, thank you.
Yeah. So can you both tell us a little bit about yourselves and the work that you do? Danielle, let's start with you.
Sure. Happy to. So my name is Daniel Gorfine. I'm one of the co-founders and project directors of the Digital Dollar Project. I'm also the founder of a fintech advisory firm called Gattaca Horizons, which I launched after leaving the CFTC last summer. At the CFTC, I had served as Chief Innovation Officer and Director of Lab CFTC. Lab CFTC is the agency's Financial Technology and Regulatory Innovation Office. And prior to that, I spent time leading external and regulatory affairs at a fintech small business lending company, and previously worked at the law firm of Covington and Burling and a think tank in Washington, D.C. Thrilled to be on with you and glad that I'm able to join Danielle.
Awesome. And Danielle, can you tell us a little bit about who you are?
Yeah, so Danielle Martell, I am a managing director in Accenture's financial services strategy practice. So I've spent my career working with clients to transform their businesses through technology and innovation. And in the past, that was usually within a company's four walls, but in more recent years, it's about driving ecosystem transformation. And by that, I mean thinking about how entities can better interact, exchange data securely, and collaborate on new business models and services. And then related to the discussion today, I'm leading Accenture's US team for the Digital Dollar Project, working closely with Daniel and the foundation, and very excited to be here today to talk about the project and why the US needs a digital dollar.
Yeah, thank you so much. So yeah, that's a great segue into my next question, which is what is the Digital Dollar Foundation and why does it exist? Why does the US need a digital dollar?
Great. Thanks, Rachel. I'll jump in and kind of take that one, at least from the perspective of the Digital Dollar Foundation, and then turn it over to Danielle to hear more from the Accenture perspective. But as I had mentioned, I served for a little over 2 years as a director of Lab CFTC at the US CFTC. And in that capacity, I spent a lot of time meeting with a broad range of innovators, and many of them were focused on blockchain, tokenization, various types of crypto projects. And I'll say that from my perspective, leaving the agency, one of my biggest takeaways from the things that I learned and that I was seeing during that time is that tokenization and DLT or DLT-inspired technologies can present more efficient, kind of better ways to send information about value and about unique ownership. So to back up for a second, today we can send an email which contains information halfway around the world with very few intermediaries and at very low cost. And what tokenization represents is that you can do the same about with information about value and ownership with fewer intermediaries and in a more efficient manner. So what struck me is that at the end of the day, that technology is going to impact the way that we transact and move all types of financial assets. and that will include money. Now, having left the agency, I've stayed in close touch with former CFTC Chairman Chris Giancarlo, and he also expresses a very strong view that our financial infrastructure today is becoming increasingly outdated or even obsolete. So in conversations that we were having, it struck us that there was an opportunity to pull together a bit more of a coherent call to action, if you will, around the need for the United States to really think hard about what it would mean to tokenize the US dollar, so a central bank digital currency supported by the Federal Reserve. And so as a result of that shared view and interest, we published an op-ed in the Wall Street Journal in the fall of last year. And following that op-ed, we got a lot of inbound from just a variety of very smart individuals and groups who expressed a very similar view to what we had noted. One of the organizations that we began having conversations with was the Accenture blockchain team, and that was led by David Treat and Danielle. And we were very like-minded in thinking about the potential impact of these technologies on money itself. So through those discussions, we were fortunate to partner with Accenture, which allowed us to bring some of their expertise and global experience with other global CBDC projects. And when we got together, we thought, well, okay, we've issued a call to action, but how do we actually now catalyze action? And that's really what drove the launch of the Digital Dollar Project. The Digital Dollar Project is a nonprofit effort, but what we're looking to do is pull together leading minds from different perspectives and stakeholder groups to help us explore the implications of a US CBDC, assess design choices and trade-offs, and really explore and pursue pilots that can, help us fully understand the real-world impact of tokenization on the dollar. And at the end of the day, we hope that if we're thoughtful about this, we can offer to the government and the public sector a set and series of recommendations or considerations as we move to the next phase of potentially implementing a CBDC.
Mm-hmm. And Danielle, can you answer that sort of from Accenture's perspective as a company that's worked more, globally in the CBDC space?
Yeah, absolutely. And I can also talk a little more to your second point you made around why does the US need the digital dollar. So as far as our partnership with the foundation, as Daniel said, very like-minded. And as you mentioned, we have a lot of global experience in the space. So we're very enthusiastic about our partnership with the foundation. And through those early conversations, we were really on board with the vision and eager to partner on the launch of this project. So we have extensive experience at Accenture working with central banks around the globe. We've been exploring use cases for central bank digital currency for years now. We really see a ton of opportunity in the US, and I've been partnering with my global colleagues to bring our insights and expertise as we shape those recommendations for the US. And for the US specifically, and why we need a digital dollar. So first, the term digital dollar has been in the media quite a bit recently. So let me just take a moment to clarify what we mean when we say digital dollar in this context. So we are not talking about simply an electronic cash infrastructure, but rather we mean a third format of central bank currency. So this is a new digital token in addition to banknotes and reserves that exist today, and it would be issued by the Fed and enjoy the full faith and credit of the US government. So this means it's not a representation of the dollar, but it actually is the dollar, just in a new format, and it would have that same legal status as the physical cash that's in your wallet today. And why is this interesting? Well, while electronic transfers of cash have been evolving for decades, there really has been little innovation to US central bank money over the past century. And this introduction of a tokenized digital dollar would really drive innovation across the financial system in a fundamental way, providing new ways to send and receive central bank money. And we see benefits for this across retail and wholesale applications, both domestically and internationally. So let me share an example that makes it a bit more real, one of the benefit areas we see, and there are certainly many benefit areas. But think about this. So today, online transactions cannot be conducted in central bank money, right? So you can't use the physical cash to make a purchase online. So for those of us with a credit card, this doesn't seem like a big deal. And we may even want to use a credit card on certain purchases to take advantage of the protections that they offer. But what about what this means to those who are unbanked or underbanked? It means they may be limited or even excluded from e-commerce. In reality, more of this population has access to a mobile phone than they do to a bank account. So in this example, a tokenized digital dollar that's held in a mobile wallet would increase access to transact online for this underserved population. So that's just one example or highlight of the benefit area, but there's many other potential use cases and benefits. And we really believe that a US central bank digital currency would be a catalyst for a lot of innovation in the financial sector.
Okay, I see. And I want to ask you, so sort of the logistics of how this would work. If I'm an unbanked person who doesn't have a bank account, but I do have a mobile phone, would I, similar to a Bitcoin wallet, would I download my digital US dollar wallet that would then be stored on that phone? Or would it be, sort of in, something like Coinbase, where my digital dollars aren't actually stored on my phone, they're sort of held by a third-party custodian? Would it be something like that?
So this is Daniel. I'm happy to take that first. And I think one of the important things that we would note about our champion model, if you will. So one thing to also flag is that we are offering at least a suggested path, and we will pressure test whether the benefits actually live up to the expectations here for these various types of design choices that you could implement. But one thing that we have proposed is that this would not disintermediate the two-tiered banking system. So what I mean by that is that individuals would still primarily receive a digital token or a minted digital dollar, if you will, through a regulated institution. So that could be a bank, or it could be a regulated money transmitter. Now, obviously, there are a range of actors that are currently subject to state money transmission regulatory requirements, and we think that that might be a layer that you can include in how folks would be able to access a digital dollar. The difference here is that we're talking about these managed or hosted digital wallets. So these would still be regulated. They would still be subject to Bank Secrecy Act, AML requirements. Of course, there's a lot of discussion that has to go into how do you balance certain very important privacy interests with the need to satisfy the BSA, AML regulatory requirements. But these offered digital wallets would reside on a mobile device, on a smartphone, and likely, and this is one of the items that we would want to pressure test, but likely the cost of providing that digital wallet should be relatively low for a variety of reasons. One, the technology should be more efficient. And secondly, the regulatory cost of offering that service may be lower than what you would traditionally see through the offering of a traditional bank account. Mm-hmm. And so those are some of the elements that would allow access to increase to this type of a service and make it more ubiquitous for currently or underbanked populations.
Okay, I see. So then is, this the sort of the main use case for the digital dollar, these unbanked populations, a lot of people would argue that, the US dollar is already digital in a way, in that a lot of the money that exists in the United States economy is, simply numbers on a screen, or, it exists in database rather than, in physical bills or gold or anything like that. So are these underbanked individuals the number one use case for this digital USD that would exist on a blockchain?
So look, as Danielle mentioned before, there are a number of different categories of use cases. So certainly the retail context, which we've been describing, that includes an and underbanked population. That could also include use cases for small businesses that are looking for an alternative payment system or payment rails. But then there's also the wholesale application, and then you have international and cross-border applications. So by no means is the digital dollar just about kind of a domestic retail use case or application. It is but one. And one of the concepts behind the Digital Dollar Project is to basically pursue pilots in these various areas so that we can determine where the greatest benefits actually are. I mean, remember, this is highly complicated. I mean, there are a lot of technology choices, there are policy choices, design choices in terms of how you structure a CBDC project. And the ultimate benefits and how they flow through, they need to be tested. And that's really why we're saying, look, in the height of a crisis, which we're facing right now, and it's important to acknowledge the current crisis, it would not be the time from our perspective to try to broadly implement something like this, because it does have really profound implications that need to be thought through. But what we are outlining here are certainly some of the high profile use cases and applications that are worth testing.
Absolutely. And yeah, speaking of this crisis, the COVID-19 pandemic has really brought the digital US dollar, the concept of a digital US dollar to the forefront. And it's already something that's kind of been on everybody's mind, particularly since last June when Libra was introduced, and also China, and in response to Libra, said, okay, we're really going to push our own national digital currency project forward. So how would you say that these three converging factors have really influenced the discussion? And do you think that these, Libra, China, and also the COVID pandemic, have they made the formation of a blockchain-based digital dollar any more realistic, or any more, is it more imminent than it was 6 months ago or a year ago?
So thanks, Rachel. It's a great question, and I want to even step back, and I want to go back to like what I think are some of the origins of this conversation around central bank digital currency. And the truth is that this all did start with the advent of Bitcoin, and I go back to Bitcoin because this is an important point. It made concepts like interoperability, shared ledgers, payments disintermediation, and decentralization. It made these really hot topics. And it got people thinking a little bit more about the plumbing and infrastructure of financial services and money itself. So these ideas have certainly been percolating now for a while. Now, to your point, we've had a number of recent events that I think have kind of elevated the thinking around these technologies, at least from the perspective of fiat money. Right. Certainly the announcements a year ago around the Libra project and the digital yuan projects, that got a lot of attention, and rightfully so. I mean, when you think about Facebook and Libra and potential application to 2 billion users, it's going to get people paying attention. And if you start looking and saying, wait, there may be more efficient ways to move, again, information about value and ownership and unique ownership, that's going to get people's attention. So I do think that those are important elements. Obviously, the digital yuan project has been in the news again recently. And so it's going to get central banks paying close attention. But I think and then again, you also mentioned the current crisis. And yes, I mean, when we think about how do we get funds to individuals in the most real-time effective way, we're going to question whether the current infrastructure is capable of doing that. Again, one point there is I think it's important to focus on the crisis at hand. And there are many already accepted ways to move money that are probably the right way to go during the height of a crisis, to make sure that we're moving funds just as expeditiously as possible and not doing something hasty. Yeah. But it is shedding attention onto this question of digital infrastructure. So at the end of the day, I think it's the right takeaway that this is the time to start exploring these issues. But we need to do so in a very thoughtful, deliberative way.
Right. So then, Danielle, maybe you can answer this question. What would it look like on a practical level? I mean, that's kind of a big question because, as you mentioned earlier, Danielle, there's, we have to look at this from sort of a policy level as well as a tech level, and, distribution and all of those different things. So when we're thinking about, the intelligent design of something like a digital USD, what are the practical steps that would have to be taken in order to at least start that happening in a safe way?
Yeah, so let me give you, to your question around what does it look like on a practical level, let me give you a bit of an example and some of the principles that we're looking to follow. So if you imagine, and as both Daniel and I said, we see use cases really across many spectrums, from retail, wholesale, internationally, domestically. But imagine in the future that much the way in a retail case, you can withdraw cash from an ATM today and put that physical cash in your wallet. You can have tokenized dollars in a mobile wallet on your phone that you can then use like you use cash today. So, and as Daniel mentioned earlier, the intent in all of this is to maintain the two-tiered banking system. So similar to today, whereby commercial banks obtain banknotes from the Fed that they can subsequently distribute to consumers. In the future, the Fed could issue those digital dollars to the regulated intermediaries that can then distribute those digital dollars to their customers on demand, very similar to the ATM physical cash example. So a customer then would have the same choices that they do today with physical cash, right? They can hold those digital dollars in their mobile wallet, like you can hold physical cash in your wallet, or you can deposit them into a bank account. And at that point, it becomes part of the bank's balance sheet against which the bank can lend as it does today. So much of that principle of the two-tier system and the way it would work remains the same.
Okay, I see. So what kind of considerations would have to be taken into account, on a policy level? For example, if there is a digital USD, excuse me, or not even necessarily a digital USD, but something like China's national digital currency, how do we go about transacting as a country that would have a digital USD, or transacting with another country that would have its own digital blockchain-based currency? Would there be, are there any considerations to take into account when it comes to things like foreign exchange or importing and exporting, those kinds of transactions? If, for example, one country is operating in like a traditional kind of fiat way, and the other one is operating with blockchain-based currency?
So that's a great question. And I would start by saying interoperability is going to be a very important topic. And I think you're already seeing a lot of the global central banks aware of that necessity. So as you develop these central bank digital currency projects and pilots, there will need to be that kind of cross-pollination of ideas and development of systems to ensure that they are interoperable in order to kind of generate the maximum benefit of the technology. That being said, I think another area that's going to be really interesting to pay attention to is around some of the design choices that various projects may take. So for example, it is true that probably the most efficient way to construct a payment system would be through a single centralized database that kind of tracks all payment information. That could be highly efficient. But of course, there may be two major problems with that. One's resiliency, and the other may be certain privacy considerations and implications. Do we want any central entity, whether it's private sector or public sector, possessing all of that information in a single system or a single database?
Right.
So that's where, design choices are going to be really, really important. And the reason I'm raising that around interoperability is it'll just be interesting to see how these systems either square with each other, or whether there are certain attributes that are more attractive with one particular application than another. To come back to your questions before about all the different projects that are taking place overseas, I think that the important thing to note is that we view a US CBDC project as not being defensive in nature, but rather it's really an offensive opportunity. I mean, there are already many very important factors that drive the reserve currency status of the US dollar. Technology and better plumbing and infrastructure of money can be yet another factor that drives broader adoption and use and kind of future-proofs the dollar, if you will. But there is something to be thinking about in terms of what does that mean for interoperability, and what does it mean for kind of the competitive stance of various currencies into the future.
Yeah, absolutely. And kind of, in addition to that, I have to wonder, like, does the Digital Dollar Foundation envision a future in which physical cash becomes totally obsolete, and not only in the United States but also beyond, as more and more of these digital currencies take shape?
So I'd be curious to get Danielle's perspective on this, because I know that there are certain countries that are seeing decreased use of cash. And so, I would say from a U.S. perspective, at least pre-COVID crisis, we were not seeing declines in the use of cash. But I think to the point that Danielle made, the problem is for many populations that don't have access to bank accounts, they're not able to engage in e-commerce, so you can't use physical cash in a digital world. So the opportunity to offer alongside physical cash a tokenized version of that physical cash just creates more choice and more opportunity. And a lot can be built on and around that. Now, What happens into the future? Will people demand less physical paper-based money coming out of this crisis? It's possible. Is this intended to replace cash? No, but it is also a good contingency. If cash use decreases over time, you're at least allowing for access to a central bank liability in the digital world instead of it being from the physical world ATM, as Danielle outlined. I don't know, Danielle, you may have some other views on that as well, given some of what we see globally.
Yeah, and I really think it's expanding that choice. It certainly wouldn't see physical cash going away, certainly not overnight. It would be a journey of decline. But, as we've seen over the past decades across the globe in various countries, usage of cash has declined. We have seen decline in the US and some of the more recent points that Daniel made. But if you look at a country like Sweden, for example, one of the lowest uses of physical cash. And at some point, right, there are fixed costs to handling physical cash that becomes burdensome. So they have embarked on an e-krona pilot project that really was initiated as a response to that decline of cash within the country. So while I think there certainly will continue to be the decline, I don't see it completely disappearing, but rather this tokenized dollar sitting alongside the physical cash that we have today.
Okay. So I wonder, if this is something that is going to happen, do you both have sort of like, a timeline? When can we expect that something like a digital US dollar could take shape?
So I think one of the points that Daniel made about it being really important to think about this thoughtfully and do it right. And there are a lot of complexities with the US and our economy, and it's important to do this right and not too quickly, right? And much of how this has been accelerating around the world, particularly to some of the points Daniel made earlier around the introduction of Libra, which illustrated that potential of the broad community of users to adopt that tokenized means of value transfer. And even, earlier last year, a report by the BIS found that 70% of central banks were engaged or planning to engage in central bank digital currency work. And I would venture to guess that that percentage is even higher right now. So many of these global efforts to date have really aimed to perform proofs of concepts to assess facets, including some of the points Daniel made earlier as well around scalability, resiliency, privacy, and looking at use cases such as security settlements, cross-border transactions, among others. So there certainly is a lot to look at. We're approaching it in a very thoughtful way to look at the use cases, the targeted pilots, how we would prioritize and test each of the features, and really look to make some flexible design choices before we move ahead and make those recommendations to move ahead.
Right. Yeah. And Rachel, the one thing I would also just add to that is, look, at the end of the day, we're also well aware that this will require, the full leadership of the U.S. government, and more specifically the Federal Reserve. At the end of the day, we are not in the business of tokenizing or minting money. I mean, that's the role of the Federal Reserve, and the Fed will make ultimate decisions around how you mint or tokenize a U.S. dollar. You'll hear more interest coming from Capitol Hill as they think about the positioning of the U.S. Going forward. So the best that we can do, and where we think we can play a very important role, is bringing together really thoughtful minds representing many different ideas, concepts, perspectives, so that we can do some of the hard thinking, so that when the time comes to start doing either Fed-backed pilots or broader implementation, we've at least done some of the thinking. And so that's really how we aspire to do this. Now, what's that timeline going to be? Again, a lot of this is going to be public sector driven. Obviously, we hope to be a valuable resource, though, in that process.
Absolutely. Daniel and Danielle, I want to thank you both so much for your time. This has been truly fascinating for me, and I hope for our listeners as well. Do you have any thoughts or any announcements that you'd like to share before we officially sign off?
Yeah, so this has been great, Rachel, and really appreciate the time. So from this conversation, I think it's clear that both Daniel and I believe that the launch of a tokenized digital dollar is really a logical and critical next step to both future-proof the dollar and continue to ensure its competitiveness globally. And as we look ahead, the project will be publishing a white paper within the next month, and that's going to dive deeper into many of the concepts that we've talked about today. And through engagement of those concepts with stakeholders, the public sector, and our advisory group, we really intend to refine those possible use cases further, recommend the targeted pilots to test our hypotheses, and that will really inform those future design and technology choices. And we're very excited about this partnership and the journey ahead.
Yeah, and I would only add to what Danielle said that it is a really exciting and interesting time. I think that there will be this renewed focus on digital infrastructure and how we enhance our systems, make them better fit for purpose in the 21st century, drive further growth of a digital economy. I think we're seeing some of the benefits of resiliency and productivity coming out of the digital economy. And so hopefully this will be an opportunity to really kind of advance these efforts to make sure we are future-proofed and as competitive as we can be heading further into the 21st century. So thank you for the time. It's been a really good, very good discussion.
Yeah, absolutely. Thank you both for the work that you do.